Welcome to another episode of the Power Law Investor. Today is January 10th, 2025. Happy New Year to my subscribers and all of you out there. Uh, Please do like and subscribe if you aren't a subscriber as yet. Um, Today, we are going to be talking about how the investment in crypto power law following assets, namely Bitcoin and Kaspa, is coming along using the lens of the power law to make mathematically oriented decisions, investment decisions in what to buy and in what quantity. So before we go ahead, this is for informational purposes only. This is not financial advice. And today, as I make this video, Bitcoin is just above 95K and Kaspa is trading at 11 and a half cents. All right. And so with the power law, just as a quick refresher, the power law following assets, and we do this for Bitcoins, is basically taking a log, taking the graph of price on the Y and time on the X, and expressing both of them in logarithmic terms. And when we do that, we end up with this sort of graph here exhibited by the blue line for Bitcoin. And it turns out that we can draw a line through it, a trend line, using a process called linear regression. And that line is really quite a good fit. Here is the equation of that line, and here is what the R squared, which is a measure of how much of the variation in price is explained by the line. That's what the R squared value is. And then when we convert that into the price time graphs that we're all familiar with, it gives us a graph something like this. Those lines have become curves as you've gone into the linear domain. And what it allows us to do is that if we assume that the future is going to be like the past, it allows us to make predictions on what the price is going to be in the future. So for Bitcoin, using these calculations, and people use slightly different data sets and we end up with slightly different values. In 1 year, we expect Bitcoin to be on trend. If it stays on the trend line, it can go above the trend line or the below line, but if it comes back to the trend, we expect a value of about 105, 150, 145K, right? And that would be a return of about 52% from the price today, which is 95K, right? In 6 months' time, if we are going to follow the trend, we'd be at 121,000. And in a year's time, we'd be about 53%, which is fantastic for an asset. If we do that same analysis for Kaspa, again, here's that line. Here's the Bitcoin line. Here's the line for Kaspa. And we can see it has some sort of interesting stuff going on here towards the end, but we'll get to that. And we convert it into the linear domain. Again, this is that action point that I was telling you about. If it continues on trend, based on these calculations, it says that our expected return is that Kaspa is going to be around 73 cents in a year's time, and in half a year's time is going to be around 46 cents. And in a year's time, that's a return of about 500%. And in half a year's time, that's a return of just under 300%. So those are great numbers. And you can see why there's so much interest in Kaspa. So let's go ahead and just look at how the spreadsheet on how the investments are going. Now, the last time that I made one of these videos, I said, and I like to document all of these and leave it for public record, is that because Kaspa is trading so much below the trend line, the minus 50% of the trend line means half of what the trend line is, and that's typically a point from which it's bounced from. I think it's useful. It's more important to buy a lot more when we have a better deal, and buy less when we don't have such a good deal. So I think it was such a good deal. So the daily DCA, which was 100, from the 23rd onwards, I've changed that to 200. And you can see as a consequence of that, the average price per Kaspa has gone down from about 14 cents to 13, just about 13 and a half cents. And that's because we're buying more, and it doesn't go down much faster because we've already deployed a bunch of capital. So we've already deployed about $16,000, and at the rate of $200 every day, we're deploying, not getting rid of it because we expect to make a return out of it, another 200 every day, right? And so the average price per Kaspa paid is just above 13 and a half cents, and for Bitcoin is just about $72,000. Okay, and currently we're running at a small loss of about 4.5%. But that's really going to depend a lot on what happens with these prices in the future. And we are hopefully expecting these prices to rise because based on our mathematical analysis, and this is not some magical lines on a graph, this is all mathematical, we expect to have significantly higher prices a year from now. So it's important to realize that this is just a trend. It's not giving you a guarantee that this is going to happen at this particular date. It says, if the future is like the past, this is what we think is going to happen. Now, it could go above the trend, which gives you even higher returns, or it could be below the trend, which gives us lower returns. Okay. And this is the same for Bitcoin and for Kaspa. I'm going to first talk a little bit about Bitcoin because it is the king, and what happens in Bitcoins influences the rest of the market. Some people have this assumption that Kaspa, because it was following the power law, uh, and that power law meant that it was going to be independent of Bitcoin. Uh, I don't think that's completely true. Yes, it does have some degree of independence as it's spreading its own network, but everything depends upon Bitcoin and how things go, and that's a big simplification. But higher Bitcoin prices generally pull the rest of the market with it. There's some lag, of course, with the altcoin market, but in general, if Bitcoin is doing well, the rest of the market is likely going to do well also, perhaps with a lag. So with Bitcoin right now, and everyone's got a slightly different data set, we're actually just a little below trend, about 6% below trend. It says that Bitcoin should be about 100K. We're trading at 95K right now. So, just a 5% discount more or less. So we expect fairly decent returns the next year of about 50% going on, right? And when that happens, Bitcoin is going to be about at this point over here, January 2026, and that's where it's giving a value of 145. So in the short term, it's very difficult to predict what's going to happen with Bitcoin, but typically, if it's going to give us a discount, if you're buying it at a discount to the trend, then that's a good point for us to buy. And for those of you who are not following this exactly or are not Kaspa enthusiasts, it also gives you an estimated mathematically calculated target of what I think the Bitcoin price is going to be a year from now. It may be higher than that, it may be lower than now, but that's a reasonable estimate, the best mathematical estimate of what we think prices are going to be. Now, there are more sophisticated ways of looking at this, and some which will incorporate the bubbles. We're all hoping, at least those of us in the crypto space and have a position in Bitcoin, is that the price is going to be higher, but we don't know, higher than the trend line. But we don't know exactly by how much, and there's been some work in trying to figure that out. You can follow that on crypto Twitter, and you can also follow me on crypto Twitter and take part in some of these discussions around that. So let's get now to understanding with Kaspa. Again, here's the power law for Kaspa, but we can see that there have been a couple of interesting developments in this equation or in the math around this. The first one is that the equation, this 3.48 value, it used to be a lot higher. And what's been happening is that the recent values that we've been getting below the trend line, this is not adjusted in any way, it's just the raw data from the original starting point of Kaspa. That has been pulling the entire trend line down. Okay, so the expected returns based on what's as new data is coming in, the trend line updates and it's being pulled down. The other thing that we want to know is the R squared value over here has also dropped. It was about 0.095 and now it's dropped to around 0.091. The reason for that is, again, we're not following this line the way that we were earlier. Like first, we were bouncing around this line. Now we've been just below this line for quite a while. And we can look at that more clearly in this picture over here, right? So if we zoom in from about July 30th, maybe about September 15th, 14th, you can see that we start to have a lot of downward price action taking place. And because of that, it's pulling the entire trend line down, but it's also disrupting this R squared fit because if we have a bunch of values that are below the trend line, then the trend line is not doing such a good job of representing it, even if it is adjusting slowly. Okay, so I hope that is clear. Now, why is this happening? And is the future going to be like the past in which there were much higher returns, or is it going to be like what we've been getting recently, right? And I want to point out a couple of things over here that I think are useful. The first thing to realize is what happened with the KRC20 fees. These were basically the ability to have meme coins on the Kaspa network. And if we go start looking them, this is the black line over here is the price of Kaspa, and the blue line is what the rewards are for transactions on the network. So what that means is when someone is mining Kaspa over here, they are doing confirmations. And if there's a lot more transactions that take place, then the amount of Kaspa that is a reward for those transactions being added to the blocks goes up. And with the interest in KRC20 memes, because they offer quick, easy money if you get them right, there was a lot of interest, there were a lot of transactions. Some of those transactions were prioritized. So the amount of fees that the miners were getting increased dramatically, which is this blue line. So they were getting 2,000 Kaspa, 3,000 Kaspa, something like that. And then, boom, it went up to 21 million Kaspa on that one day, September 15th. And then again, on another day, it went all the way up to, well, it was 25 million then, and it was 21 million on September 15th and 25 million on October 22nd. Those were the two spikes. And what that did was miners who would typically get Kaspa in reward for their mining, called block rewards, were now getting transaction fees also. And if the transaction fees shot up, then all of a sudden these miners had a lot more Kaspa available. And with that additional Kaspa, they would have decided to sell some of it if they think the price is going to go down or if they needed money for operations or for whatever reason. That is what I think started happening around September 15th. And you can see that the rewards have not been consistently high, right? The transaction fees, what I'm calling rewards, uh, the transaction fees have not been consistently high. In fact, they've dropped down. So if you look back on what's happening for the last month, you'll see that from the peak of about 20 plus million, right now the fees are about 500,000 or so. And they seem to be going down. They're bouncing around a little bit, but you guys get the idea, right? So all of a sudden there was a lot more supply that the miners could sell. And I think that's what pushed down the price considerably. Now, this had second and third order effects, but I also want to show you this on what was happening here on the altcoin market, right? This is a graph that shows Kaspa divided by basically the rest of the altcoin market minus the stables and Bitcoin and Ethereum, the two big boys. And if you look at that right around here, you can start seeing this big decrease. And when did that start? It's around September 15th, which is when the KRC 20 actions started to happen. You look at that same thing and you look at it in terms of Kaspa divided by Bitcoin, and yeah, it was bouncing around, but look at this. Look at how sharp this peak is. It was bouncing around at this ratio, and then boom, goes all the way down, and maybe it's stabilizing now. Who knows? So that's what I think happened. I think that the KRC20 went active. We had a lot more. Let's just go back to the Kaspa chart over here. This was around here, September 15th. We started having a lot more fees, a lot more supply started coming into the market. It overwhelmed demand at that equilibrium, and there was a lower price, and that kept on pushing things down. And we got to realize that there are second and third order effects of this also, right? And the second order effect from that is that people see that the price is going down, so it encourages them to sell. And the third order effect is that attention moves away from things that are going down in price towards things that are going in price, right? That's kind of how momentum or price chasing goes. You're buying, I'm buying. You're selling, I'm selling, right? So people are addressed, nothing gets more attention than rising prices. So when the price goes down, you get less attention and the demand starts going away. But now let's take a step back and try and understand what we think is going to happen, right? The fundamentals of the power law is that there was some sort of network effect going on that was balancing supply and demand. And it was going in a predictably mathematical way, right? There were some variations, but more or less it was described by the trend line. And that was going on in the middle of July. And we can see like, oh, it started to drop down, but it still seemed to be okay. But then this KRC20 thing happened, right? And after that, there has been some disruption, right? The attention that people had about this coin that had done so well in a bear market, maybe that got disrupted. Maybe attention started going away to the other parts of the altcoin market that were doing much better. Like there's been so much attention towards virtuals right now, which has just taken off. And so that probably caused second and third order consequences more than just increasing the supply. Because if you look now, the amount of additional supply that has come in really isn't that much more, right? Right now, this is about 500,000 when it says, right, fees and CAS over there. We're getting about 6.5 or so million CAS in rewards for block miners every day. So this is, maybe about 5%, 6%, 7% increase in supply. So that does have an impact, but increasing the supply by 10% should not result in a massive decrease in prices, unless you're very sensitive to price, of course. It depends on the price elasticity, but let's just assume that isn't such a big deal. So, what can we then estimate about what's happening? I'll give you sort of three reference points that will try and help us, or maybe four reference points, right? The first reference points is, look, there was some sort of network effect that was going on all throughout this period and all throughout this period over here, all right? And then that started getting disrupted around here, and then it went kind of crazy over here. So was there anything magical that happened that sort of network effect is not there? The price has stabilized now around here, and that's minus 50 to the trend line. Is that indicative that there is some underlying demand? Have the people who were interested in Kaspa as a community, as a technology, or as an investment, have they significantly changed? Of course, it has changed somewhat, but is it enough to change the story? Right. And for that, I'd encourage you to look at sort of the Kaspa Reddit, the Kaspa Discord, on crypto Twitter, and get an idea of whether there is still an active community that believes in this coin. Right. So that's one. You could also investigate the technology and what's unique about Kaspa and how it solves the trilemma, and see what you feel about it. Is it really innovative or not? So that's number one. Number two is the fact that these fees seem to be drying up. Right. So if this change happened because of the KRC20 interaction, and now those fees are drying up, are we going to go back to the equilibrium that we had earlier? We don't know for sure, but I would think that probably would happen. It might take a while to get back up there, but it would happen. Third point I would say is that the underlying community is still active. We've talked about how that there was this demand going on, but there's been definitely some negative mood, but the community itself is quite active, right? And the fourth one I would like, sorry, the third one might also be that it seems to have stabilized somewhat, right? As if you're looking at this now, you sort of seem to be from about, and it's been only a short period of time, maybe 3 weeks or so, is that we're starting to now get a little more stable here, right? We haven't gone down below that much more. Even if you look at it relative to Bitcoin from about here, we seem to have stabilized. Now, again, let me give you the caveat here that narrative follows price. So price action is king. And now we're creating all these narratives about what might be happening or not. So you have to develop your own personal narrative about what you think is working or not working. I'm giving you the narratives from the pro side, like, oh, this is going to come back or this is going to do well. The con side is, hey, man, it's broken and just get out of it. So you have to look at the evidence and weigh it out and make the decision for yourself. And finally, the last piece of evidence that I'll give to you guys is if you try and figure out what the cost structure to mine Kaspa is like, if we go back to the fundamentals, and I think a lot of people haven't thought about this, the fundamentals is a balance between supply and demand. Okay, and if the demand is there, the miners have to be incentivized to produce enough supply so that the demand is met. And if most of the miners are not going to continue producing at a loss. And if you do some calculations, and there are different calculators online, this is from a site called What to Mine. If you look at what some of the most efficient miners are doing right now, you plug in the block rewards and you plug in what the cost is to actually mine Kaspa. And if you look at ClearSpark, which is a Bitcoin miner, their prices are about 5 cents per kilowatt hour. And you plug in the hardware cost, etc., you find that the daily revenue that these guys would be making for Kaspa mining is about $10.50. You call it $11. And the profit is around, let's call it $7 and be generous, right? Typically, you want to pay off the hardware within a year's time. You want to pay it off as soon as possible, but the mechanics are that you want to pay it off within a year's time if you can. Now, if you look at ClearSpark, they basically have a 3-year effective life for their asset. I don't think it quite works that way. I think if you're buying new stuff right now, I think the active life is much short and the way the rewards change. And it's not such a trivial calculation because the total amount of hashing capacity in the network is also growing. So you have to keep on pumping new money in. But a year's time to get back your money and then start making on Kaspa seems reasonable. And if you look at the break even right now, it's just about a year's time. And that's with these sorts of prices. So if it was me as a miner, it would be sort of a, yeah, this is kind of an equal decision. Can I get something that's better bang for my buck? I'm not going to get rich doing this anytime soon. So the miners have also set out this floor, right? So the 4 points are, has something fundamentally changed with the networking story that all this time the network there was not, has now changed? That's one. And that network was exhibited by the power law. Number two would be this drop in fees now. Number three would be how it seems to be stabilizing versus the rest of the altcoin market. And point number four would be the cost structure of the miners. So if you put that all together, you find, at least I find, the evidence is pretty compelling that we've at least reached a floor. I don't think we go down much more. And that's why, even on the last video, I set a limit order for all available cash at just 9.5 cents. I don't know whether we're going to get there. It would be great to buy a lot more Kaspa at that price, and that's what I'm saving this cash for if we get there. But if we don't, we might actually have stabilized somewhat already and we should start growing up. Now, how fast we're going to go up, we can't say for sure. If we use the math and put in all available data, we estimate that the price in a year's time should be about 73 cents if we remain on trend. We could go higher than trend, we could go lower than trend. But if it's 73.5 cents, based on the price of buying it today, you're looking at a 5x plus return, which is pretty good if you ask me. So that's some of the stuff I would be thinking about as you guys make your own investment decisions. And I was confident enough to increase my DCA from 100 to 200 daily at this point because I think it's going to be a good deal. I will give you guys a little preview that I am looking, so that sort of finishes it up for today. I will give you guys a little bit of a preview that in the next coming weeks, I will be introducing some different methodologies that are also very mathematically based, but not necessarily dependent upon the power law in order to make better investment decisions. And that'll give you yet one more point, another way of thinking about things, and I'll be sharing those with you on the channel. As to how we can make better buying and selling decisions and have a better return on our investment. So keep yourself informed. Please like and subscribe. You can sign up for my Twitter on X, and I'll leave that in the link below. So hope you guys enjoyed the channel and enjoyed the video, and you're enjoying the channel, and see you on the next one. Ciao.